You probably woke up this week thinking everything was business as usual. Same headlines, same politics, same market swings. But what just happened isn't just news, it's a reset. And not the kind you hear about in conspiracy forums. I'm talking about a cold, calculated move that just reprogrammed the global economy in real time, quietly but powerfully. They pulled the trigger on something much bigger than tariffs or trade disputes. This is about control, currency, and survival. The United States just took a step that could shake the foundations of how wealth, power, and influence are distributed across the world. While most people are distracted by noise, a few are quietly preparing to make money and position themselves for financial freedom before the next wave hits. So, if you're tired of feeling like you're 2 steps behind, if you've ever wondered why everything seems to be changing so fast, stick around. What I'm about to show you could be the roadmap that few are talking about, but everyone will feel. The moment Trump stood up and declared Liberation Day, Wall Street didn't just flinch, it panicked. Within 24 hours, major indexes tanked, wiping out trillions of dollars in market value like it was monopoly money. Seasoned investors compared it to 2008, but this time it wasn't a bank collapsing. It was a nation flipping the chessboard mid-game. And behind every red candle on those charts, there was a silent scream from portfolios across America. Here's the kicker. When the market crashes that fast, regular folks feel it long before the headlines fade. Retirement accounts? Shaken? 401ks? Bleeding? That Robinhood portfolio you check on your lunch break? Down bad. But here's the twist. In every downturn, there's someone quietly preparing to make money. Solid companies like Coca-Cola and Johnson & Johnson were suddenly trading at bargain prices. For those paying attention, that chaos spelled opportunity. But what if this wasn't just chaos? What if it was choreography? Some insiders began whispering that this crash wasn't a bug. It was the first domino in a much bigger economic strategy. And when you look closely, you'll see the next move wasn't just national, it was global. The tariffs weren't just targeted. They were a full-blown offensive. Imports from China, Vietnam, the European Union, and others were hit with rates as high as 50%, shaking the foundation of global supply chains. The message? Bring production home, protect national security, and make America self-reliant again. It was a bold play, with a clear patriotic pitch, but with global consequences. Washington framed it as an act of economic liberation, a way to rebuild American industry from the inside out. Supporters called it the long overdue wake-up call, arguing that too much dependence on cheap labor abroad had left the US vulnerable. After all, if one ship stuck in the Suez Canal could choke entire industries, wasn't it time to rethink where things are made? Still, there was something deeper at play. This wasn't just about tariffs, it was about leverage. While factories in Asia held the screws, Washington had just picked up a wrench of its own. But not everyone agreed with how it was being used. As expected, the backlash came fast. Economists, CEOs, and even some politicians called the tariffs a ticking time bomb. Higher prices on consumer goods, potential trade wars, and a looming slowdown in the US economy were just a few of the red flags raised. Grocery stores warned of rising food costs, automakers braced for parts shortages, and families, they'd soon feel it at checkout. But not everyone saw it that way. Some hailed the tariffs as a necessary reset. Painful, sure, but not unlike ripping off a Band-Aid. In their eyes, America had been undercut and outmaneuvered for too long, and it was time to take the hit now, rather than bleed slowly over decades. It was the tough love school of economics, and for some, it rang true. What's fascinating is how these two narratives collided, one rooted in fear, the other in nationalism. And somewhere in the middle, people began asking, could this chaos actually be part of a bigger, more calculated move? Enter a theory that most media outlets wouldn't dare touch. What if the crash was intentional? A controlled burn, engineered to slow things down just enough to force the Federal Reserve's hand? Lower interest rates, renewed lending, and eventually a juiced up stock market once again. Sounds crazy? Maybe. But that's how big plays often start. In real estate, Trump learned that money is made when rates are low and leverage is high. Could he be exporting that strategy to the national level? By tanking demand, prices drop. Inflation cools. And suddenly, the Fed is boxed in. Cut rates or face a deeper collapse. For debt-heavy governments and asset-hungry investors, that's not a problem. It's a golden opportunity. This planned pain theory may sound like 4D chess, but some of the moves make a strange kind of sense. And when you follow the money, you start seeing patterns that aren't accidental, especially when we dig into how the tariffs were actually calculated. The method used to calculate these tariffs wasn't exactly elegant. It was based on bilateral trade deficits, essentially who the US was losing to in dollar terms. But that formula left out a crucial detail. The US is a services powerhouse. When you factor in things like tech, finance, and consulting, the deficit numbers shift big time. Ignoring the service sector created a distorted picture. It made some countries look like villains when, in reality, they were just on the receiving end of American tech exports and Hollywood blockbusters. And worse, it framed the US as a constant victim, when in many sectors, it's the dominant player. So the question becomes, was this a genuine miscalculation, or was it part of the setup? Because when you compare the tariff rates applied versus those received, a pattern of imbalance emerges. For years, politicians claimed the US was being treated unfairly, that foreign tariffs were crushing American exports. But when the numbers were laid out, they told a different story. Countries like Australia and Indonesia had lower average tariffs on American goods than the US imposed on theirs. The lack of reciprocity narrative started to crack. Take China, for example. While they've been no angels in trade, their average tariff rate wasn't wildly out of line compared to what the US had imposed historically. And in some cases, like certain manufactured goods, America had the upper hand. The myth of a one-sided trade war was just that, a myth. Still, perception often trumps reality. And in politics, framing is everything. As the narrative took root, other dominoes began to fall, particularly in emerging markets that suddenly found themselves in the blast radius. Emerging markets didn't stand a chance. Currencies devalued overnight, stocks nosedived, and economies that relied on US demand started to buckle. But the shockwaves didn't stop at the border. Inside the US, corporations began to panic. Lobbyists flooded DC asking for exemptions, and supply chain managers scrambled to adjust. Even big players like Apple and Walmart started sounding alarms. Tariff costs couldn't be absorbed forever. Eventually, they'd hit shelves and wallets. At the same time, small businesses, the backbone of the American economy, began to feel the squeeze. Higher input costs, longer delays, and unpredictable pricing turned operations into chaos. And just when it seemed like things couldn't get messier, history walked back onto the stage, with a few surprising allies in tow. Here's where it gets interesting. Even some of Trump's harshest critics had once called for a tougher stance on China. From Democrats in Rust Belt states to past administrations, warnings about intellectual property theft and unfair trade were nothing new. The message had changed, but the frustration was decades old. Old clips resurfaced of politicians from both parties demanding action. Economists who once laughed at tariffs were suddenly rethinking their positions. It wasn't that Trump had invented a new problem, he'd simply weaponized an old one, loudly. And in that noise, a strange kind of agreement began to form. But was this really about trade, or was it about timing? Because if you look at Trump's business background, a pattern begins to emerge. And it's not just political. Trump built his empire on timing. Buy low, refinance, ride the wave. So when the economy started to stall, seemingly on purpose, some wondered if this was just another version of the same playbook. Trigger a slowdown, force rate cuts, and make debt cheaper. For those holding the right assets, that's not a recession, that's a sale. A weaker economy may sound bad, but it opens doors. Investors swoop in, capital becomes cheap, and the Fed gets cornered into printing again. If you're sitting on real estate, equities, or even treasury bonds, that's not pain, that's profit. And if you're Trump, it's a battlefield you know well. And he's not alone in seeing the game this way. Big names in finance started talking, one in particular, with a history of calling global shifts before they happen. Ray Dalio doesn't mince words. The billionaire investor warned that the current monetary system is on its last legs. In his view, the tariffs and the market shocks they trigger could pave the way for a broader reset, a rebalancing of economic and geopolitical power. It's not just about goods and services anymore. It's about the entire architecture of wealth. Dalio pointed to the cycle: debt buildup, inflation, deflation, and finally, restructuring. He suggested that this could be the moment when old models collapse and new ones rise. Digital currencies, decentralized finance, and alternative stores of value like gold or even crypto all may become mainstream. In that context, the tariffs weren't a final move, they were a spark. And when you connect the dots, you start to see something else, a deeper ambition that goes far beyond short-term politics. Behind the chaos, a strategy seems to be emerging. It's not just about punishing China or protecting steel. It's about reindustrializing America, reducing dependence on fragile global supply chains, and, perhaps most importantly, defending the US dollar's dominance. Painful? Yes. Necessary? That's the debate. Think about it. Bringing manufacturing back means jobs, stability, and leverage. If the US can produce at home what it used to import, it changes the global balance. And in a world flirting with digital currencies and alternative reserve assets, maintaining the dollar's supremacy becomes more critical than ever. The tariffs may be the tool, but the goal? Economic sovereignty. And whether you agree with the method or not, the direction being taken has echoes of previous eras of transformation. Here's the truth. On the surface, the tariffs look reckless, but step back, and they might be part of a calculated reset, the kind of long-term play that history remembers not for its noise, but for its impact. And in uncertain times, clarity rarely comes from headlines. It comes from connecting patterns that others ignore. The narrator doesn't ask you to pick a side, just to think deeper. Could the pain be part of a plan? Could financial chaos be a path to something more stable? The answers might not be obvious, but one thing's for sure: the next phase is already in motion. So now the question is, what are you going to do with this information? Will you keep scrolling like nothing's happening? Or will you start thinking like the people who quietly build wealth while the world panics? Because the truth is, resets like this don't happen often. And when they do, they don't wait for permission. You don't need to be a Wall Street insider or an economist to prepare. You just need clarity, strategy, and the willingness to act when others freeze. Ask yourself, are you diversifying your income? Are you learning how to thrive in a shifting economy? Or are you still hoping things will go back to normal? If this video opened your eyes, even just a little, don't leave without subscribing and turning on notifications. This channel is where we decode the noise, simplify the chaos, and give you real strategies to make money, protect your assets, and move toward real financial freedom. The reset has already started. The next move is yours. And just when you think the last card has been played, a new financial invention appears on the table. One so bold, it might actually buy more time. Introducing the Super Bond, a US Treasury bond with a 100-year maturity. Sounds absurd, right? But in desperate times, creative accounting becomes national policy. Kick the can far enough and maybe, just maybe, someone else will clean up the mess. It's like refinancing your mortgage, then asking your grandkids to finish the payments. From a political standpoint, it delays pain. From an investor's view, it depends who's desperate enough to buy in, especially during a global reset when trust is scarce. This kind of maneuver keeps the game going, but it doesn't fix the foundation. It's a pause button, not a solution. And while it might buy time, the clock keeps ticking, and the market knows it. Meanwhile, under the surface, panic brews, and the first cracks are already showing up in the places investors trust most. Stock markets don't lie, they scream. And right now, they're screaming in every direction. The VIX is surging. Stocks like Nvidia are diving billions overnight, and people are running from risk like it's on fire. That's not normal, that's fear. Even government bonds, usually the safe bet, are acting like tech stocks, spiking, falling, trembling. When bonds get volatile, it means nobody trusts the future. People are grabbing gold, dollars, and short-term treasury bills like lifeboats on a sinking ship. This environment makes it harder to make money the traditional way, but opens doors for those playing the long game. If you know where to look, panic becomes opportunity. And in a world shifting fast, owning assets that survive the storm is smarter than chasing the wind. Which brings us to a more personal angle: how someone can navigate this chaos, not with fear, but with a clear, calculated strategy. The creator pulls back the curtain here and reveals their own investment play: VTI and Bitcoin. Simple, steady, and high conviction. While the world panics, they accumulate. That's not gambling. That's knowing the storm will pass, and fortunes are built in the ashes. Online business owners and retail investors alike can take notes. Instead of day trading news, focus on timeless assets. Store crypto securely with hardware wallets like Ledger or Trezor. Treat downturns as discounts, not disasters. A long-term mindset isn't sexy, but it works, especially when paired with tools, courses, and knowledge that cut through the noise. That's how you build financial freedom. Not by chasing hype, but by stacking quiet wins during loud chaos. And as we prepare for the final chapter, one truth stands tall: nobody knows exactly how this ends, but everyone should be ready for any path. In a world this volatile, pretending to know the future is foolish. Even the government is guessing. What matters isn't guessing right, it's being positioned right. Every possible path still leads back to one thing: lower interest rates and the fight to stay afloat. Whether through a currency crisis, a digital reboot, or policy pivots, the goal remains the same: control the game and keep power intact. But regular people don't have to be pawns. They can prepare, act smart, and use this chaos to their advantage. That's why staying calm isn't optional, it's strategic. When others panic, you can build. When others freeze, you move. That's how legacies are built, not in safe times, but in storms. And speaking of storms, you'll want to hear what came next, because the signs were there and they ignored them on purpose. Now that you've seen the full picture, what will you do with it? Will you just scroll to the next video and forget everything? Or will you take control while everyone else waits for permission? Because the truth is, in times like these, action beats anxiety, every single time. Ask yourself, if interest rates drop, are you positioned to win? If the US economy cracks further, will you panic or pivot? If the next wave of the global reset hits tomorrow, will you be caught off guard? Or will you already be building something that lasts? This isn't just economic theory, it's personal survival strategy. Because at the end of the day, the people who make money during a storm aren't the ones with the best degrees. They're the ones who paid attention, who moved before the crowd, who used chaos to create financial freedom, not just fear. And you're already 10 steps ahead, because now you know what's really going on. If this opened your eyes, don't leave without subscribing. Hit that notification bell, not for vanity metrics, but so you never miss the next move in this financial chess game. And remember, in a world where everything's rigged, knowledge is your greatest edge.